Good morning. This is Arlan Suderman, Chief Commodities Economist at StoneX, with an update on the latest in the commodity markets and the impact of the tariff situation. We did see President Trump step in on negotiations with Japan yesterday. In Trump 1.0, he pretty much left the negotiations up to his team. This time around in Trump 2.0, he's taken a much more hands on approach. He wants to be directly involved in the negotiations. Now, we've seen the market reaction to the reciprocal tariffs announced on April 2nd, initially pricing in a worst case scenario. Now they're starting to move toward it. Well, there may be some opportunities for some good things coming out of here. Still a tremendous amount of uncertainty. Markets don't like uncertainty. President Trump tends to negotiate via chaos. Markets don't like that. But I'm hearing a few more voices on Wall Street start to speak. We need to price in the possibility here that this could end up with something good some months down the road, whenever that may be. President Trump, for his standpoint, needs to assist that line of thinking by getting some genuinely good trade deals out of this. And so, as I've indicated previously, he needs an agreement with a major trading partner like Japan, like South Korea. He's talked to both now. He had a conversation with President Sheinbaum of Mexico here within the last 24 hours, it sounds like, that he says went well. They're meeting with Italy today. So the conversations are great. We love seeing that, but we need to see a trade deal come out of that with a major trading partner and see that momentum going in that direction right now to reassure the markets. Now, the markets are closed tomorrow for Good Friday and the Easter holiday weekend. 3 days of the markets being closed. Headlines, no doubt, will continue to come out through the 3-day holiday weekend. So that's something that traders have to be aware of, have to be cognizant of, and position for that risk. Those headlines could be positive or negative, but that's the risk that they face going into this weekend. As we look at the commodities specifically, we did see crude oil moving a little bit higher again this morning on increasing sanctions on countries buying Iranian oil. So that tightens up the supply just a little bit more. And with the stock market, I'm going to say stabilizing. It's hard to say stable when we're seeing these big swings, but it's within the same range of trade thus far. So with the stock market stabilizing, we're seeing the same thing in crude oil as well, right above some of those break-even price levels from the shale oil fields that we see. The crude oil going a little bit higher on that news. And when we look at the grain and oilseeds, we continue to see some money rotate into that sector. I'm not forecasting a bull market here, but I'm very encouraged by what I'm seeing of how resilient they are. And we had good export sales on the weekly export sales report from USDA this morning for corn and soybeans, helping provide a lift as well. How will we go into the weekend? Yeah, we're going to see a lot of positioning. I don't expect any major moves at this point. There is some rumors that we could hear some clarity on a renewable fuel standard from the EPA as early as next week. We had been anticipating it by Memorial Day, so that'd be considerably earlier than what we anticipated. If we don't get it next week, then I think maybe the traders are going to get discouraged and the soy oil market may face some liquidation of some long positions there until we actually get an announcement. But in the meantime, there is that possibility we could see some of that support in the market. So going into the 3-day holiday weekend, once again, as we look at things, overall, grain and oil seeds mixed but firmer, crude oil a little bit firmer, stock market mixed. Now we see if we get any headlines out today, and most assuredly we probably will from the trade situation. I hope you have a good holiday weekend, and we'll be back with you next week.